Enghouse Systems, ENGH, on the Toronto Stock Exchange. The U.S. markets are closed. Seems like a good time to do a couple of Canadian ones. So I've got Enghouse and Income Exchange today for us. Both little gems. All right, so Enghouse is a software company. They have three main divisions. Go over them quickly. The first division is called, one second, I had to tip my tongue, Interactive, okay? Enghouse Interactive, and it's really about how you would manage your your office, your phones, and someone automated phone reception, and if people want to record messages or they want to get to certain departments and things like that, it's all handled in software. And a ton of companies would need software like that. Virtually everyone of any size would need that. And Enghouse Interactive is a big player in that space. The next one is Enghouse Networks, and they got a portfolio of products there. Number portability, intelligent network platform, service delivery cloud, GIS and network analytics, mobile network rollout. So that's their networks. And then the last one is transportation. That's basically logistics. There's tons of logistics types of software. Driver timekeeping, dispatch, fixed routes, real-time demand response, etc. Okay, so there's three main divisions. This is not a huge company. Does about 100 million in EBITDA. It's about I was going to say 1.5, but it might be $1.9 billion market cap, and virtually no debt. I think the best thing to do is just dive right into our model, and let's do that right now. Here we go. Okay, so as you see, great company, great return on invested capital. Way back in the mid 2000s, 2006, 2007 was earning 10s and 6s, and then just skyrocketed returns there. Just improved, and you see the stock chart in that little bit of a different color there, that little light yellow. We try and overlay the stock chart over top of the returns, and you see as the returns were climbing, so was the stock, and that's very typical. So that's awesome. Latest quarter, let's dive in a little bit on the financials and at least look at some revenue growth and things like that. So the stock did stall out about 6 months ago, and we only had 1.9% growth and 1.1. It seems to be climbing back to 4.7. I actually don't expect a huge amount of growth in this company. It's more of a recurring revenue type of model. They're not in a big growth phase, but they can easily add on. It's very scalable, of course, and it's in a space that is always growing, but not on a massive basis. So it's not a massively growing company, but it's a very good quality, consistent company. You can see the EBITDA down here is every quarter 27 billion, 27 million, 26 million, 28 million, 27 million, 25, etc. And as we go back, it's slightly lower. So I kind of expect that to continue. There's no reason not to believe that. I think the dividend history looks great here. It's a very small dividend, but it gives me hope. It's only about a 1.1% dividend yield, and that's on a trailing basis. Some other sources have it at 1.25 on a forward basis. We always use the trailing just to make sure we're conservative. But what I think the key is you see every fourth quarter they've been raising their dividend. In fact, they raised it a little bit early in this one. And then on the bottom here is the cash flow versus the dividend on a trailing forward basis. And they're only paying out 25% of their cash flow in a dividend. I actually think they got a little bit of room to maybe move that up. So that's awesome. It's only like I said, it's a small dividend, but I'll take the bonus anytime. I expect the shares to climb, and I expect to get the little dividend and the dividend to climb as well. So you kind of got two ways to win there: capital appreciation and dividend growth. And as I said, great solid company. If they ever started growing again at 10% or 12% clip, the stock would go crazy. But I'll take the 4 or 5%. I think the stock still moves up just based on that. I didn't really get into valuations, so let's quickly look at that. this is kind of what we're looking at. I have a $50 fair value. It's only trading at 35. This is all Canadian dollars, by the way. So about a 42% upside, and you really can't ask for much more. Good solid block and tackle technology software kind of name. ENGH on Toronto.